Like I said, I think the case for having bonds in your portfolio is still very strong. But I do think that we starting in the 80s and really going through for most of us, our investing life span, have been in a world that was very favorable to the 60/40 portfolio. Low inflation, rates moving lower, a pretty positive environment for growth. And also starting, of course, going back to 82, very low valuations in stocks. Stocks are, the S&P 500 was downright cheap, which kind of brings me to probably one of my biggest issues with the 60/40 right now. The S&P 500 is by no means cheap. There's different ways of looking at how expensive the S&P is. You can look at the Q ratio. You can look at the Shiller PE. There's other PE metrics derived from the Shiller. But in general, what most of those methods are going to show that have a kind of historical validity to them, that kind of work out with back testing, is that the S&P 500 last year reached or exceeded levels you had only seen in 1929 and 2000. And one of the strengths of that 60/40 portfolio is that long-term performance. And if you take a look at the S&P 500, there's only two periods you get of negative decade returns. Well, that was after 1929 and 2000. And then you look back and you say, okay, this market got extremely expensive, still is very expensive. What are the historical parallels? Well, they're 1929 and 2000. Now, that doesn't mean you're going to have a 1929 type event. It doesn't even mean you're going to have a 2000 type event. But what it does imply is that stretching things out to the long term, your expectations for performance of the S&P 500 should be very negative, actually. I mean, negative in terms of your outlook, not very negative in terms of your returns. It might eke out, if it kind of follows a mathematical model, something like a flat return over the next decade before inflation. But when we take a look at how expensive the S&P 500, driven by large cap growth stocks, has become, the historical precedent is actually pretty alarming.
Yeah, so one of the negatives of the strategy is that it doesn't get you out. It will let you, if you have outperformance, so you go to an extreme multiple valuation like we saw last year. It will sell some, but it will still keep you exposed to those equities at a 60%. And over the long term, your expected return based upon that starting point is not going to be as good as history has proven. The baby boomer generation has amassed a massive amount of savings and capital, and really the combination of interest rates going down for 40 years and the amount of capital, supply of capital and savings that generation has, these strategies did well for the last 40 years. And as they are retiring now, I think that we shouldn't expect them to do as well in the intermediate term. And certainly this year, the strategy is down 16%. I mean, bonds are down over 40% on the long end. Equities are down, 20%. So, I know that math doesn't add up, but it's
you're pulling out the long end of the curve on bonds. So I mean,
yeah.
If you just look at kind of the average for bonds, it's probably a year to date. Probably the lows were something probably around that, down 15%. But you add that to the S&P at its lows, I think was down about 25. You blend those together, and we're up from the lows, but that's still not a great year. If you're down somewhere around, like, whether it's 18 or 20.
Yeah, so I think it's a great strategy. It's a strategy that is kind of like your investing 101 strategy, and it's a good starting point to understand what the benefits are to investing. And at times like today, I think you need to have consideration if a simple strategy like this given, we're in a century, once in a century pandemic. We have interest rates that have dropped for 40 years straight. We have the wealthiest country and generation of a developed country in the history of the world. And we have the biggest debt levels in the history of the developed world. So, so some consideration for that, some consideration for the valuations, we think is important, and have just a little bit more sophistication than such a simple strategy, but it's certainly not a bad strategy over the course of history.